Hello everyone, I am Gautam Bhupal. I am an equity fund manager at HSBC Asset Management India. Today, I am here to talk about an exciting opportunity of growing consumption in India. But before that, let me talk about an event that took place few months back. The event was Apple opening its first official store in India. Though it was widely covered by media, but the significance of this event is underappreciated. If you look at China, Apple opened their first store in 2008-9. Since then, its revenue in China has grown 25 times. India should see a similar success. In fact, we are already seeing this consumption pattern playing out in some categories. GDP per capita of $2,000 has been an inflection point for many economies like Japan, South Korea, and China. In the following 10 years, their GDP grew 4 times, while most discretionary category grew 3 to 7 times, indicating an accelerated growth in both income as well as consumption. India crossed this inflection point in 2019, and with favorable demographics, there is a good reason to believe that India will follow a similar path. India is favorably positioned in terms of demographic. Currently, there are 95 million households with income of rupees 5 lakh and more. This number of households is expected to double in 10 years. This will lead to a substantial increase in disposable income. On top of that, by 2030, 3/4 of India's population will comprise of millennials and Gen Z, which have a higher spending pattern compared to older generation. In addition, there has been substantial increase in access to credit in last few years, particularly for small ticket items. Credit card spends has grown 12 times in last 10 years. Easy access to credit will fuel further growth in consumption. Another important point I would like to highlight that spending patterns are changing. As income level increase, spend on essential does not increase in the same proportion, whereas spend on discretionary items grow disproportionately. Also, the young India is very aspirational and they don't shy away from spending on the things they want. This, along with technological evolution, has led to emergence of lot of new categories which were not there 10-15 years back. Smartphone is a prime example of that. Overall, we expect that there would be a higher growth in household income in next 10 years. This, along with easy access to credit and changing aspiration of young Indian, will lead to accelerated growth in consumption, particularly discretionary consumption. When we look at the consumption pattern, we see that there are few themes that emerges. One such theme is of penetration. There are several categories which are under-penetrated and hence can grow at a fast pace in the coming decade. For instance, air conditioner has only 7% penetration in India versus 30% in Malaysia and 53% in China. Refrigerator has only 35% penetration in India versus 90% plus in most developed countries and few emerging countries. Hence, some of these categories which has a lower penetration has a potential of higher growth in the coming year. Shift of trade from unorganized to organized sector is another theme. Jewelry sales of organized player were 17%, which has doubled in last 10 years. In real estate, the share of top 10 organized developers in major city used to be in mid-teens 10 years back. This number is now 40 to 70%. We believe that this shift from unorganized to organized will continue. Another trend that is emerging is of premiumization. We are moving from feature phone to smartphone. More people prefer to take flight than train to travel. More people prefer to use automatic versus manual gear car. To sum up, we believe that it is very exciting time ahead for consumption as a theme. Consumption is 60% of India's GDP and large part of listed space. Hence, it is a large opportunity and HSBC Consumption Fund will help you participate in this opportunity. Finally, why you should consider investing in HSBC Consumption Fund. If you look at NSE 500 index, there are around 260 odd companies that can be considered for the fund. Out of these, around 200 are mid and small cap companies. As a fund house, we already have a higher focus on mid and small cap segment. Our large research team enable us to have in-house research on large number of mid and small cap companies, which help in stock selection. We believe that this, along with our focus on longer term approach to investing, will help in creating alpha in this space. Thank you very much.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.